Welcome, everyone. I just posted a video on short selling. I didn't mention the video that if you're a member of my Patreon channel, you can get the Excel file. I posted it on Patreon. So if you watched the video and you wanted to use the spreadsheet, maybe there's formulas in there or just want to reference something, it's on Patreon. I didn't add it to Patreon for free, but I could add it for everyone. But right now it's just if you're a member. So the video, I talked about shorting, and I think it's more fun in a live stream because there's a lot of things I kind of leave out in a video, because when you explain something, if you pick a topic, even if you're an expert, I mean, you don't have to be an expert. If you know something really well, like you know how to drive and you want to teach someone how to drive, it can get so confusing trying to explain. Like, okay, you put the key in, you put the key inside that little hole thing, and it turns on the ignition, the engine goes on, and it's so wordy sometimes, and you never get anywhere, and it gets so confusing. So when you make videos, you kind of have to limit the words and try to convey your message. But the live stream, it's pretty good because I could kind of expand on some things. Agav, what's up? Hi there, guys. How's it going? And I don't know if anybody ever noticed, but I don't really prepare when I make videos. I obviously have to get the Excel file set up, but I don't go through the motions. Like, I don't practice what I'm going to say. I just say it. And oftentimes, like, I'll learn during a video, there's something, like it might be something on the balance sheet that I don't even understand why it's there. So I kind of have to Google it and then figure it out and throw it in the video. So I don't know. Does anybody notice that my videos don't seem prepared? I don't think so. I think they seem pretty. We shorting and video what? If you want to lose a lot of money, I'm not touching that one. And I feel bad for you guys because I should have been bullish Nvidia. I was so bullish Meta, and Meta did go up like 400%. So hope you made money on Meta, but I was so I've been bullish on Meta since day one. So I made good money, but Nvidia I wasn't bullish at all. Somebody made a comment. One of my what's his name? He comments a lot. Like he's a member, and he's it was a good comment. He said you could tell this is probably what's the most common winning investment strategy for a new beginner? Like a comment like this seems it seems innocent. It seems like a real comment, but you know it's a scam because it got liked 8 times already, and then it's followed up by so many other comments. Comments don't get, if somebody makes a comment, it might get a like or two. Maybe over a few months it could get 10 likes, but somebody comments and within a few minutes they get a ton of likes, and it's a scam. You could even tell because they want it to look innocent, and then they say, oh, as a beginner, it's essential. So somebody else, it's probably the same person, it's essential to have a mentor. And then the next person says, Miss Mary Gail Benner. And the next person goes, oh, I'm new at this. Please, how can I reach her? And the next person she's on Telegram, and then somebody later on, a different name, goes, oh, I've used her. She's really good. I just hide them. I hide every hide user from channel. I don't mind those comments. I know it's a scam, but I hate the comments when someone uses my logo, and maybe their name is very similar to my name, and then they comment on all my comments and saying, "Oh, follow me on Instagram," and then they try to sell you something. That's really annoying. Yeah, right. Mary Gella, she's legit. Maybe I'm wrong. So oh, somebody mentioned like Scott, I love your videos. I probably could find it. But I know he comments a lot. He's a good guy. I think like most, there it is. He comments a lot, and I know he's just trying to learn like anybody else. But for many of these stocks, is it too late to do anything once you analyze them? As if he's trying to say like, since I'm making the video, it's kind of past the point. Like, I should have made the video 6 months ago and then said, buy the stock. So in this case, I like to do stocks that are trending. So this was a trending stock, Super Micro, because it went up like 800% in the past 6 months. So I want to get a lot of views too. But I do a lot of videos of stocks before they are big, when they're still kind of small. But a lot of people just don't invest in them because they don't know. I could have done a video on Super Micro last year, and I guarantee hardly anybody would have invested in them. But I try to make updates on my videos like a year later if I hit. But I did. I made a comment. I'm trying to do it more on this ticker MSS. But anyways, like a month ago, I said MSS looks like a good buy. MSS. And I'll show you MSS. So I mentioned MSS, it was trading at 15, and then one day it went down to 250. And I ended up picking it up around 150. Actually, I could tell you my cost basis. It was 180, so I didn't get it at the bottom. And it did bottom out at like 80 cents. But obviously, who knows when the bottom is? If you got it 80 cents, you would have been great. But look at it. Look, it just on February 6th. On February 6th, it was 88 cents. Okay, February 7th, it went up to 10 cents, 98, then to $1.10 the following day, then $1.50. It went up like from 88 to 1, so it went up 100% in a week. So I did call it, but it depends when you bought it. Even if you bought it when I said it, you're still not down, and there's a chance it could go to 4 or 5. So how many views is worth making the video? What do you mean, how many views is worth making a video? Oh, Bulldog, I've been trying to get in contact with you. I was looking for your email. Can you do a live stream with me? Because I think it would be good. I like to have other channels, or anybody really. But if you have a channel, it's good to have on a live stream. It kind of promotes each other's channel. We get subs and it's fun. So email me. We can maybe next weekend or the weekend after. You can be a guest on my live stream. And that goes for anybody, by the way. But anybody could be a guest. But if you have a channel, I would think it makes sense. Candida. Yeah, Candida. That's the what's Candida again? Candida is a fungus, right? What? Candida. It's a disease. Yeah, that's a disease. That's where I heard it from. Candida. But what did you? What is the best stock to short right now? God, it's so hard. I'm not a big fan of shorting stocks. I've been talking about shorting Apple for a few months now, and I think it's a good short. Not that I think Apple's going to go down a lot, but in a short term, I think it was a little inflated. But let's get back to the I always have my phone number on my channel screen. Okay. Yeah, email me, Bulldog. I couldn't. I did on your live stream. I did say, hey, do you want to do contact me? You could be a co-host on one of my live streams, but you probably didn't see it because I know you're running 24/7. So I guess I'll just go through the steps. Before you short a stock, before you start doing research into what stock to short, I think it's good to just understand what shorting a stock is. So there's pretty much 3 ways to short a stock. You can sell a stock short, you can buy a put, or you can sell a call. Savvy, you changed your name, Savvy Social Show. He also, you should do a stream with me, Savvy. I think I might have mentioned that to you. So those are the 3 ways. If there's another way, let me know. You can buy I have 2 channels. What's the other one? You can buy I can't. Okay, those are my 3 main. I'm trying to. I can't. I'm trying to think of something. It'll come to me. But the problem. So when I just did a video and I went through this process, I'll do the same thing. And this Excel file is on my Patreon channel if anybody wants it. So I just explained what shorting a stock is, and it was pretty much the explanation from the point of view of selling a stock short. It wasn't really options. Options are a different animal, and I think it's good to understand them. But when I try to explain all this stuff, it just gets so confusing, and people, I think, stop watching because it just doesn't make sense. I think selling a stock short is pretty straightforward. I think I did Tesla. Not that I would short Tesla. It's a nice dollar amount for my example, $200. Because it's hard to go. If you buy 100 shares of a stock trading at $4.80 and you short 100 shares, it gets so confusing. So this is what shorting is. Please confuse us. I know that you guys, I'm going to go into detail because I know you guys want the detail, but most people who watch YouTube videos can't handle too much complexity, unless obviously you follow the market a lot. My channel is not meant for beginners. It's meant for people who have some fundamentals, but of course anybody could watch it. So shorting is pretty simple. And this is what I said in my video. I go, okay, the first step is you borrow a share from your broker. So you let your broker know. My broker's E-Trade. You might use Fidelity. There's hundreds of brokers out there, right? So you let them know what you want to short, and then they give you a share of Tesla, and then not really giving it to me. I'm kind of borrowing it, and then I immediately sell it. So in this case, I get $200. So my account will go up $200. And this is not. They don't actually give me the stock, and I go out and sell it. They do everything. So I just kind of like, and I made a video. I made a video of I actually shorted Tesla in the video on my E-Trade account. Of course, and then I reversed it right away. I lost a few bucks from the fees or whatever, but I actually shorted it. So I just showed you how the process works. But anyways, so you don't do anything. You just kind of tell them, I want to short Tesla. And what they do is they just sell a share in open market and then put money in your account. But the process is you're actually borrowing a share, immediately selling it, and you get the cash in your account. And the cash in your account, it's not like you have to hold that cash for any, just in case the stock goes up a lot. It's your money. You can do whatever you want with it. Howdy, finally able to catch the live stream. What's up? How's it going? I do not want to derail the topic. Wondering if you would consider a video on QCOM. Then you buy a car. Right, exactly. You could buy a house. I'll look into that stock. I can't even. Is it QCOM? Or, there's something on my screen. I can't even read it. QCOM. I'm not even sure what that stock is, but so if you sold like 100 shares of Tesla, if you shorted 100 shares of Tesla, that's a lot of money. 100 times 200, that's 20 G's, right? So you can go out and party, have a lot of fun. Oh, Qualcomm. Okay, Qualcomm, of course. Yeah, very familiar with the semiconductor company Qualcomm. I was thinking QCOM was the name of the company. I wasn't thinking that was a ticker. So, but you have you're legally obligated to give those shares back at some point. And the only way you can give your Tesla share back is you have to buy it in the open market. Because shares are, what's the word? What's that word? When a commodity. Fungible. Yeah, I'm thinking of commodity, but it's not a commodity. The thing is, if you borrow, what's a good example? what's something that's not unique? That's very that's like specialized. Okay, like if your friend oh, what's it called? If you borrow like somebody's engagement ring, right? Um, and then you sell it in the open market, kind of like shorting a stock. Uh, then at some point you have to buy back that engagement ring. You probably can't buy it back because it's so unique, that engagement ring. You're not going to find one identical to the one you bought. But a share of stock, is that the right word? Fungible. It's exactly the same. So it doesn't matter if if I lent you a share of Tesla stock and you gave me a share of Tesla stock in 6 months, it doesn't matter. It's the same thing. It's the same exact stock. So this is probably why people stop. Fungibility is the ability of a good or asset to be readily interchangeable. It's fungible. That's the word I was thinking of. It's fungible. That's exactly what I was. Mutually interchangeable. So without getting too much on a tangent, I'll just try to stick to the simple. So when you sell a stock short, there's really no time frame. It's not that you don't have like a certain date you have to give the share back. So if you say you borrowed a share of stock on February 1st of this year, it's not like you have to give it back by March 1st or April 1st. You have really as long as you want. But let's just say it was a week. You had a week time frame to do this transaction. Maybe it was just in your it was a week for you. Like you would only do it for a week. That's like how you trade. It's not the rule, your broker. So say after 1 week, Tesla's stock goes down. It goes down to 150. So what you do is you buy the stock in open market for 150. You give it back to your broker, that one share. So you're replacing the share that you borrowed. So you made a $50 profit. So that's great. That's exactly what you want when you short a stock. You want it to go down, so you replace it. Alternatively, say a week, say you bought it for 200, you borrowed it for 200. A week later, it's 250. It goes up. Now you have to. You can only buy the stock for 250. No one's going to sell it to you for less than 250. Maybe 249. I mean, but it's pretty much going to be 250. There's no way you're going to like. It's not like buying like if you wanted to buy a brand new like BMW and the going rate was $80,000, you might be able to find somebody that was really needed money and you can get it for $60,000. Or maybe you can like use your, if you were a woman, you could flirt with the sales guy, maybe get him down a little bit. But with stocks, if it's trading at 250, you have to pay 250 for it. So you pay 250 for the stock. You replace your stock you purchased, which you purchased, well, you borrowed for 200. So you lost $50. And that's why I wanted to do. That's why I wanted to do a live stream, because of what people are saying right here. You have to pay margin. And I didn't say that in the video, because if I start saying margin, it's like people just get lost. So the real simple, high level understanding of it is this process. And then, but if you pay 200 for it, and say your personal timeline is a week because you don't like to hold it more than a week, and a stock is 250, then you say, okay, I'm going to wait another week because I don't want to lose money. I'm not going to pay 250 because I borrowed it for 200. So another week later, it's 275. Then a month later, it's 300, and you keep waiting and waiting and waiting and waiting, and it's already like 1,000. So you don't know if it's going to ever go back down, and you do have to replace it at some point. But the one thing I didn't talk about in the video is that this is from Fidelity's website. I don't know like if all websites are like this, but it's pricey. So the problem with selling short is that you have to do it on margin. You can't, even if you have $1 billion in your account, you can't just borrow stock without paying a fee. It's kind of like a loan. And look at the interest rate. Look how high it is, 13.5%. I think this is, if you have $1 million in your account, you can get it down to 9%. But let's just use 10%. So let's just say you borrowed 1 share of Tesla for $200, and let's just say your time frame was a year. So you said to yourself, I'm going to give it a year. Even if it goes up and up and up after 6 months, I'm going to wait as long as I need to wait to get my money back. So let's just say, so you, in 1 year, you have to pay $20 in fees to your broker. It's called the margin interest rate. So let's just say, for example, you sold it after 1 year for $220. You made nothing. You broke even. Sorry, that doesn't make sense. 180. Did anybody cash that? So say you borrowed a share of Tesla, which means you sold short Tesla when Tesla was $200, and you did that today. So that means you borrowed a share from your broker, you sold it in the open market, then you got $200 in cash put into your account. And then a year later, you were able to replace the share for 180, which looks great. Looks like, wow, you made $20. A 10% return is a good return, but you made nothing because you had to pay that $20 in margin. So you can't hold it that long. You can't hold it for like 10 years because you're going to get eaten up to death in interest. So you generally want to time it where it's probably 2-3 months max, because even 6 months, you could pay 5%, unless obviously if the stock, like if you buy a stock for like 200, and even if you waited a year and it went down to 50, you're killing it. Of course, who knows if it's going to go down to 50? It might go up. So it might actually go up from 200 to 220. So you lose $20 there, then you lose another $20 in margin. I had to teach my girlfriend about impulse shopping. You have to expect something to crash the stock. So yeah, I didn't mention the margin part. Just because it was, I tried to at one point, but I just gave up. And in my example, I did only have a 1 week time frame from buying back the Tesla stock. So it wouldn't have been much in terms of interest anyway, because how much is 10%? So equals, 1 over 365 times 0.1. It would have been 5 cents in interest. Now that's 1 day. Sorry. So my time frame was a week. So it would have been 38 cents of interest on the $200 investment in Tesla. So that's selling a stock short. Options are better because in options you don't have to pay those interest rates, those high interest rates, but you have a time frame. When you sell a call option or buy a put option, you have to do it within a certain time frame. And sometimes the time, and if the time frame is too far out into the future, there's less kind of benefit for you if you are correct in your short position. If you time it right within like a month, you can make an amazing return. But with one put option, you have to control 100 shares of Tesla. Same thing with a call option. So when you have one contract, it's 100 shares. So you can lever up pretty quickly. So these are the two websites I mentioned. $10 over 52. Good point. Yeah, that would have given the same rate. 10%. Yeah, you're right. 10%. So there's these two websites I mentioned in the video. Stocks with the highest short interest. So this website shows you stocks. Fisker is the most shorted stock. Just because a stock is highly shorted, 47% short interest, does not mean it's going to be a short squeeze. And you also have to remember, this might not even be accurate because you hope it's accurate, but sometimes it's hard for them to get the correct information, and sometimes it's not timely because usually for calls and puts, it's not like it's not traded as it's not as liquid, so it's not traded as often. So the info may be a week or two old by the time you get it, but hopefully it's pretty accurate. So Fisker, Beyond Meat, Carvana, Plug, Luminar, Sirius. Groupon is the one I used in my video. So I guess we'll use Groupon. So but you don't have to use any of these. These are just the stocks that have the highest short percentage. But if you go to this website, and I'll put the websites in the description of this video, and I also put the websites in the description of the video I just posted. It's just a NASDAQ website, and then you can it shows you the most viewed stocks in terms of short, but you could enter any ticker you want, and you could see the short interest. So in the video, I just did Groupon. So you could type in Groupon or the ticker GRPN, and then it shows you stupid pop-ups. The settlement date, the short interest, the average daily share volume, and days to cover. So I just put a picture of this right here in Excel. So this is Groupon short interest. So you can see 3.9 million shares were shorted on the 1/31 settlement date and 1 million daily volume. So I just want to show you, you can just, if you're not comfortable with all these websites, like searching for all this info, you can just use Yahoo Finance. You could probably get all the info, because most websites have all the info. You just need to understand how to find it. So if you go to Yahoo Finance and then go to stats, and then it shows you, like, it's slightly different, but it's probably, it's within the same range. This shows you the average volume, shares outstanding. I also put a picture of this in my Excel file, but just so you know, you go to Yahoo Finance, it's all free information. I kind of like Yahoo Finance a little better because the average volume is 900,000, three months volume. All that means is that in the past 3 months, 900,000 shares of Groupon were traded each day. In the past 10 days, it was a little more. It shows you there's 39 million shares outstanding of Groupon. I'll put that here. 39 million. But this is if you want to short, well, not so much short. I mean, shorting a stock is part of it. But if you want to do a short squeeze, this is how you try to identify it. You look at how many shares are on float. Do you know what I mean by that? How many shares on float? What does that mean? I just want to make sure. I know some of you know what this is, but I think it's, what does that mean? 18 million shares on float. So 18 million on float. Does float mean available shares? Pretty much, that's what it means, available. The only thing this website gives you is it gives you days to cover, which you can calculate pretty easily with Yahoo Finance. But if you don't want to calculate it, so I think it's like their entire company has 39 million shares. Shares on float all it means is that those are the shares available for us to buy. So this implies shares so this implies 21 million shares are locked up. Like, they are shares that are worth the same as everybody else's shares, but you can't buy them. They're usually held by the founder, or maybe an early investor, or maybe an employee. Because, say for instance, you're an employee of the company, and say you're joining the company, and they really want you to join. You're not just a regular worker. You've done some big things at similar companies, so they really want you to join Groupon. So they give you a nice salary, but they say, this is what we're going to do for you. We're going to give you 4 million shares of stock. Now let's do less, like 1 million shares of stock, but you don't get it. Oh boy. You don't get 1 million shares on day one. You get 100,000 shares each year for 10 years. So they're locked up shares. Those million, nobody can touch them. They're your shares, but you don't get them until after your first year. You get 100,000 shares. Your second year, you get another 100,000 shares. Your third year, you get another 100,000, and so on and so on. And they may make, there's always different kind of like scenarios. They may say, we give you 1 million across 10 years, but you can't ever sell them until you're here 5 years. So once you're after your 5th year, then in theory, you've been here 5 years, you would have 500,000 shares, because you get 100,000 a year, and then you could sell as many as you want, or you don't have to sell them. But so after your 3rd year, you get 300,000 shares, but you can't sell them. You can't touch them. So, and you're just one employee. They may have 100 employees that have similar kind of arrangements. And then maybe an early investor who owned part of the company before they became public has 5 million shares, and they're locked up, so nobody can buy them. So that's what it. But are not available for shareholders. So they're real shares that affect you. So if the company pays 39 million shares, right? Say they pay 39 million in dividends, right? That means each shareholder gets $1 in dividends. So even the shares that are locked up get $1. So it's not like they don't get dividends. Everybody, you get $1. The shares on float are, if you own 100 shares of Groupon, part of your 100 shares are these 18 million, the shares on float. So this, it's a really important stat to understand, because if you wanted to identify a short squeeze, the more shares locked up, the better. Because I try to give this example at the end of the video, and I'll do it now. So this is kind of like what happened with GameStop. I mean, this won't be exactly what happened, but I'll kind of give you a scenario on what the Reddit community attempted to do, and they did it pretty well. Let's just say say it's January 1. And this could be, and there's a million shares shorted. So that means people like hedge funds or individual investors think the stock will go down, so they borrow shares. So a million shares, it could be one company it could be one big hedge fund that shorted a million, or it could be a million individuals that shorted one share each. But all we know is 1 million shares are shorted. And also every day, if you recall, and the average daily volume each day is 1 million. So the days to cover calculation, which we didn't even get to, oh, okay. Oh, it's right here, which we didn't even get to, but hopefully it's not too confusing. So if let's just pretend that each scenario on January 1st, this is the information we have, and then by the end of each month, the shorts have to cover. So today, and then the cover. So by the end of the month, the shorts. Actually, no. Let's do. It's usually every 2 weeks. If you notice, the settlement dates are usually every 2 weeks. You see, like the settlement dates, they use twice a month, mid-month, end of the month. So let's say by January 15th, these million shares, the people who borrowed them, shorted them, have to return the shares. If the trading volume is already 1 million each day, then it's pretty easy for the people to borrow the stock, right? They just say it's trading at $4. Then they just go into the open market, they pay $4 per share, and they return the shares they shorted, they borrowed. And let's just say next month, the shorts are getting more aggressive. Now there's 3 million shares that are shorted. And the trading volume is still 1 million. So 1 million shares are traded each day. Now but they have literally 2 weeks, right, to cover their shorts. So it's not that hard for them to accumulate 3 million shares in 2 weeks, because there's already 1 million people selling each day. So it may drive the price up a little bit, because you have people trying to buy 3 million shares when there's only 1 million each day. So you might have to wait a few days. So the days to cover is 3. So it may push the stock price up a little, because there's more. Because you could think of this as the demand, and this as the supply. So this is the demand, and the daily supply is 1 million. So now demand is getting a little higher than supply, and it pushes the price up to $6. And now, since the price is up, the shorts are getting even more aggressive, because they're like, this stock should be they triple. All these shorts now are shorting 3 times as much as before. So say there was a hedge fund that shorted 100,000 shares on February 1st. Now they're doing 300,000 shares on March 1st. They're really getting aggressive with their shorting. So And this is kind of how GameStop was able to apply a short squeeze. So the daily trading volume is obviously dependent on people selling their shares. So what Reddit did was they told people, don't sell, hodl, hold, don't sell, because if you buy stock, right, of a company and you don't sell it, you're taking shares off the market that could have been traded. And if enough people did it, in GameStop's case, enough people did do it, and they brought the trading volume down. The daily trading volume, actually, I'm just making up numbers. I don't even know what the volume was. I'm just explaining how a short squeeze works. So they were able to buy up enough stock of GameStop and just hold it, not trade it. Even if it goes up to 7, 8, 9, 10, 11, 12, 13, 14, they won't sell it. They won't sell it. So this is how you create a short squeeze. You have 9 million short people who shorted the stock, 9 million shares that need to be replaced because they bought it on March 1st. They borrowed 9 million shares on March 1st, and they have to return it by March 15th, regardless of what the stock price is. And now the daily trading volume has cover. Well, it just keeps going up and up and up and up. And generally, the way to cover is, even though people are hodling, there are some people who are going to give in. So if somebody paid 6 and it hits 15, some people will sell at 15, but probably not enough people will sell at 15. So then it has to go up to more. It goes up to 20. Because these 9 million shares need to get covered by March 15th. Then it goes to 30. It has to keep going up because they have to cover. If they don't cover, they could be in a lot of trouble. They could be forced into bankruptcy. So that's a simple way. Does that make sense to everybody? So this is what the website provides that we just looked at. If you type in a ticker, and we typed in Groupon, it shows you the short interest, the average daily share volume, and the days to cover. So if you think a stock is ripe for a short squeeze, you'd want that days to cover to be high, like at least 8. If it's 10, 15, 20, then it's great, because the short sellers are going to have to start bidding really high. It's kind of like an auction. If there's not enough people who are willing to sell, the buyers have to keep upping the price. So it looks like on January 12th was the best, because they had 6 days to cover. You could see the short interest was highest relative to the share volume, only 800,000 shares a day. So how do we now? So how do we identify these short? Well, let's look at Fisker. Fisker is the highest. What's it? FSR. Yeah, the problem is they don't have every. Yahoo Finance will probably have it. FSR. So the short, 106 million. You could see this is Yahoo Finance Groupon. You could see that shares short on 131 was 3.9 million. And you can see it's the same as this website right here. So you can just use Yahoo Finance because you notice that NASDAQ site didn't have the details for Fisker. And this is Yahoo Finance for Fisker. So 106 million shares short. Okay. 106 million and 50,000. 106 million. It's a lot of shares short. You can see they have 400 million shares outstanding. 402,820. Okay, short shares. Outstanding shares. But remember, we don't care about outstanding shares because we want the shares on float because that's going to affect the short sellers. Because if a share is not on float, so there's 142 million shares that are not on float. They're locked up. So if you're a short seller, if you're one of the short sellers who borrowed one of these shares, you can't 142 million shares you can't buy because they're locked up. They're not on float, which helps if you're looking for a short squeeze, which helps you a lot. Another thing that helps you a lot is when people buy the stock and not sell it. So if you hodl and not sell, you can drive the price higher. Okay, so anyways, so we know there's only 261 million shares that are available. So it's not that high. It'll take 2.5 days for the shorts to cover their position. So in this case, you're probably not going to get a short squeeze in this scenario, even though 28% of the shares are shorted. There's just a lot of people out there, a lot of shares out there to buy. Actually, it's a better scenario to do the average volume. The average volume. So the average volume is 35 million. So it's you should look at the shorted shares over the average volume. because that's how you calculate days to cover, short interest over average daily volume. So in this case, it's only 3 days. So it shouldn't be that hard for them to cover. But that's not the only thing to look at. That's just one thing to look at. What's it called? So this was a SPAC because you could see it was $10 initially. So that was back in 2018. It looks like it was $10. And then it looks like its peak was in the 30s. It's really just getting hammered, the stock. I think they're just priced for bankruptcy. So I wouldn't, this is not like a long-term investment strategy. I wouldn't use this type of analysis to buy and hold. This is more of a swing trade kind of thing. So if you're looking for a short-term trade, this I'd probably stay away from this one because it's just let me show you that other one that I'm invested in. That I feel like Yahoo Finance is easier to look at. I have a hard time looking at the chart on. So MSF started out at 7. It got up to 14. And then they had bad earnings. But you could see how do you, you can see the resistance point is down here. And now it's starting to rebound. So once it at least gets to, there's some resistance, there's some upside. Fisker is it's just really going down. There's no kind of upside at all in Fisker. It's kind of priced to go bankrupt. I'm not saying this is a good long-term one, but in terms of a short-term play, you could make a nice 2 or 3x return on it. Okay. So anybody, I think I hit all these points. Okay, so I guess I'll log off now. I think we got through everything. Anyone else have any ideas or any questions? Any stocks to look at to do a DCF on? Okay. Let me know in the comments. Anybody have any ideas? Any stocks to do a quick DCF? KVU. Kenvue. Has anybody heard of this stock, Kenvue? It's a pretty decent sized company. Kenvue. 1937 billion. Oh, yeah, okay. I think I've now that rings a bell. A spin-off from Johnson & Johnson. I think yeah. That makes a lot of sense. Good call. I didn't pick up on that right away. I'm not sure how. I should have, since I own Johnson & Johnson, but so you could get the future free cash flows from Simply Wall Street, 2.3, 2.7, 2.9. Let's use the highest whack. So 22, they're trading at 19, so it's a 15% discount. Looks pretty good. Even with the highest whack, it still looks like it's a good value. From the can be used prior to none. Benadryl, Zyrtec, Listerine. So pretty big names. When did they spin off? It was recent, yeah, November 2021. They spun off. Never heard of it, but I seen the ticket before. These are the kind of stocks that are kind of like pretty safe. You're not going to lose much. I mean, you could lose 10, 20% over a few years, but like they're never going to go out of business. You should get a pretty good dividend, 4%. So even if the stock is flat, you get your 4%. This hasn't done that well. Just like Johnson & Johnson's kind of really crappy the past, ever since kind of COVID, these pharmaceutical type biotechnology or in the medical space, these kind of stocks have really kind of struggled. But it does move with Johnson & Johnson. It's since the spinoff, Johnson & Johnson is flat and this stock is down 5%. So yeah, it looks like an interesting stock. A nice nice dividend, a nice safe dividend. I like, wow, 25%. Sheesh. You don't really see wax that high. Is that Lee cycle or Lie cycle? 69 million. I don't know about, I don't think we're going to be able to get much from this one. The hard part is the forecast for the free cash flow is to be negative. Actually, they have positive in 2026. Let's just 0, 0. What's the 2026? 11 million. Well, we do get a value. 20 cents. Stock price is 39 cents. They just basically dropped off a cliff. This was a SPAC also. It peaked at 13. Li-Cycle is a leading global lithium-ion battery resource recovery company in Northeast. Interesting. 1 second, I'll be right back. That's crazy. The whack. They just. What does Li-Cycle do? We are able to safely receive and recycle all lithium-ion batteries, regardless of the form factor, state charge. This is the kind of company, if they can get like a contract with Tesla or I guess any EV company, the stock would like go up 50x. Life cycle customers. Who's that? Who's that guy? The hedge fund manager, Peter. He has like the gray hair. There's a good quote. The best. He goes, the best investor is the one who turns over the most stones. He was like, he ran a big fund for like 30 years, an average. Peter Lynch. Thank you. I like that. Peter Lynch, who was credited with coining the phrase, has also been quoted saying, the person that turns over the most rocks wins the game. That's always been my philosophy. So like stocks like this, like, which I wouldn't have even thought about, if we just keep looking at turning over looking at all these stocks, we'll have a lot more success than someone who doesn't really look at anything. They were supposed to be building a facility, but that project stalled. What I have a hard time doing, which I wish I was better at, is understanding like the management of the company, like if they're good or not. They always seem good on paper, but I would like to understand conversations. There's no results were disappointing, but a bad revenue number. This isn't really important if they hit their rollout schedule. The institutional investors here is following the money. And where are they located? Are they in the U.S.? Okay, Toronto. Yeah, I wonder if it's well, look at this. Well, they got really, look at these gaps here. That gap has got to get filled. I think this could be a good kind of like one where we could catch the bottom. Because oftentimes some companies they don't go bankrupt. They somehow they borrow more money or dilute more shareholders. Because unless they do a reverse stock split, which I guess is the concern, which they probably will do a reverse stock split so they can stay. So this one. Yeah, they've been really struggling, but okay. So I guess that was a pretty long stream. Thanks for joining. Hope you learned something new. And I'll talk to you guys soon. Oh wait, SoFi. Yeah, SoFi wasn't. Yeah, I'm pretty bullish new. I'm up like 130 or 140% on new. And I think more, yeah, I'm at 424 new bank. Well, I didn't want to leave. I didn't, no one was saying anything, so I was getting bored. Yeah, new bank. I do want to get into SoFi. Um, oh, there's no work tomorrow. That's why. Yeah, that was. This is one of my. I hope it holds up. I got in at 424 on June June 2022. So I really got lucky on this one. I PO'd up here at 12. I got in at 424 down here. Not quite the bottom, but pretty close. It was June. Yeah. And yeah, so I'm up a lot in that. That's been doing really well. SoFi, I think is good. I think it's just a matter of time till it blows up. But the problem, yeah, it's really been. Look at that first month. Wow. So it bottomed out at like 5. I don't think it's Yeah, I think this might blow up soon to like $50, $100. Because fintech is kind of a lot of upside. Bitcoin's kind of tough. I don't know. I did buy Bitcoin. I'm up like 40%, but I only bought $100 because, um, but it's kind of like it's really a gamble. I don't really know how to really value these kind of crypto things. It's really, I guess anything's a guesswork, but at least with a stock, I have a little intuition on it. But H band. Yeah, I think T is a good one. I think T is a good long term play. Um, it really got down there, and it's still trading. Yeah, Bitcoin. It's been really doing well, right? So T's at 17. It's 15% below its 52-week high. It's 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 26% above its 52-week low. So it's not up that much. They don't have the 20-day. Institution sales. Do you guys follow the simple moving average? They're 1.5% below their 20-day. They're above their 50-day, and they're 8% above their 200-day. Well, the shipping, he's good. What's his name again? Yeah, I like that guy. He's what's his Marine? He oh wait, yes, I do. I just always hear it. What's his name? Yeah, the simple moving average. What's a good 200-day SMA? Yeah, it's hard to think when you're on a live stream. And like when I'm alone, it's easy to process things. But when you're live, you don't think as clearly. Can't remember his name. Damn it. It doesn't matter. Yeah, that's something I need to start looking at the RSI and SMAs more. I mean, I guess if I want to do more short term and swing trading. What's yeah. But the problem, yeah, T is just it just doesn't move. It takes forever for the price to go up. But you got to think. I mean, it's almost back to its where it was 30 years ago. Its price. So I mean, you got to think. My favorite REITs. I kind of like O. How come it doesn't come up? Realty income. How come it? Wow, look at that candlestick. Sheesh. In 1 month, It went from 37 to 70. Oh, that's March 2020. Realty income. They pay a monthly dividend, a 6% yield. Look at that revenue. It's more than doubled since 2020. Cash flow is more than doubled, went up 2.5 times. You got to figure, look, in 2020, in the beginning of 2020 was 70. I mean, then it got like really low, but that was COVID. So beginning of 2020, it was 70, right? And now it's 50, and the revenue is 2.5 times higher than when it was 2020 levels. So the stock is down like 30%, even though revenue is double and free cash flow is 150% higher, or 2.5x. REITs can be a little tricky to value. The only thing is that the revenue may be significantly higher, but the share count you're saying they added a lot of shares. Like, let's see if that's true. Most companies that make a lot of money buy back stock, but let's see. Shares outstanding. You're right. The shares outstanding also doubled. That's good catch there. So they add a lot of shares. I guess they're a REIT, so they have to either add shares or take on debt in order to grow, because they have to give out so much back in dividends. Interesting. I guess it was in the wake of Realty Income's announcement to acquire Spirit Realty. What year was this? This is recent. Observed roughly 5% decline in realty. However, it's quite common for the share price of the acquiring company to slide after acquisition announcement. So bottleneck here in London, we are seeing a lot of from whereas usually Realty Income. Wikipedia, if you want to learn about a company, I think Wikipedia is a good place to start. Commercial properties in the U.S., Spain, and UK are subject to triple net leases. Companies organized in Maryland, headquartered San Diego. The company is one of the few real estate investment trusts that pays dividends monthly rather than quarterly, and has registered trademark for the phrase the monthly dividend. Actually, give me 1 minute. I'll be right back. How's it going? It's funny because when I leave, more people come in when I come back. So maybe I should just leave and not come back. Then the views. That 11,000 properties. It's a lot of properties. Wow. Walgreens is 4%. 7-Eleven, Dollar General. Yeah, I've been doing kind of like consulting. So I work at 3 companies when I do like the bookkeeping, like kind of like a fractional CFO kind of gig. And 2 of the companies are in commercial real estate. So I help, I do the accounting. They're a management company, so they have to manage the properties. So we have shopping centers or apartment buildings. So a lot of the tenants are paying the triple net, the leases. If you're not familiar with triple net, I just think of the person's name, Tim. But if you have a business and you sign a lease with the owner of the property, say you pay the owner $3,000 a month for the space, but he may say it's triple net, so you have to also pay $500 in triple net fees, so it's $3,500 a month. So the reason I wrote Tim is triple net is pretty much taxes, insurance, and maintenance of the property. So if you sign like a 5-year lease, they may say like, okay, $3,500 a month, and then each year your the cost for the rent will go up 5% a year. So next year, the 3,000 will be, fuck. That's kind of high, 3%, but I mean 5%. So each year it goes up 5%. So next year, 3,150, then 3,300, and 3,478. But the thing about the triple net is you don't really know how much it's going to be next year. I mean, you can there's an estimate, but like if taxes go up a lot, or insurance goes up, or maintenance, usually it's within a certain range. It'll probably go up a similar amount, like 3-4% a year. But if like, if the state you're in, or the county you're in is really struggling financially, they can like raise taxes 30%. Especially in California. California, they're always like in debt. Most owners triple net holder for 5-10 years. Most owners of triple net holder 5 to 10 years, then 1031 it. Yeah, does anybody know? 1031. Commercial real estate is kind of a rough investment. So when he says 1031 it, the 1031 exchange. So if you own say you pay $1 million for like this office building, and you rent it out, and then say in 10 years you sell it for $1.5 million. Well, what you could do is, so to avoid paying taxes, because you should pay taxes on $500,000, right? Because you paid $1 million for it, you sold it for $1.5 million, so you should pay taxes on your gains. But you could do a 1031 exchange where, if within 1 year of selling it, you buy another commercial property for, say, a similar amount. So say you find another property, say for $1.6 million. So you use the sale price to buy the other property, then you take $100,000 out of your pocket, so you don't pay taxes. So that's a 1031 exchange. Is that what you meant, Grief, when you said then 1031 it? Yeah, I think that's the capital gains. So it's an interesting industry. The thing is, when you buy a residential, like the place you live in, if you pay $1 million for your home, or say like $500K for your home, and if home values, they can go up, they can go down. Generally, they're going to go up. But when you own commercial, it's the property value doesn't really matter that much. It's how much money you're getting from your tenants. So if there's like a building A and building B, and they were both like, say, across the street from each other, and they were similar sizes, and similar, decor, age, they were pretty much almost identical buildings, right? But building A had like a great tenant, like Walgreens, that took up the entire bottom floor, and they were paying a lot in rent. And building B just didn't have that good of tenants. So building A could possibly be sold for $5 million, identical buildings, and building B for $3 million, like literally right across the street from each other, same size, same number of units, and they can have that much of a spread on price. Where if you had two homes across the street from each other, if you had like home A and home B across the street from each other, and home A sold for $1 million, home B would sell between like 900K and 1.1 million. Like there would be a very small range between the two sales. Obviously, if one of the homes is beat up, like it needed a ton of work, then yeah, I get it why it wouldn't sell for as much. But I'm talking about almost identical homes and sizes. With residential, it's pretty much the same price. There's no way you can double the price of your home, even if you add like solid gold steps to your, there's really nothing you can do to double the price of your home. But like for commercial, you can double the price of your building if you can get really, really good tenants. Because the price of a commercial building is what you receive as income from your tenants. So it's kind of a different. The building, there's value there, but the real value is the income you earn from the property. So it's interesting. So you can't really like you can't like sell the property, like the building B. You can't say I want 4 million because the guy across the street got 5 million, and you could find tenants to pay, because obviously across the street he found tenants. So you can't do that. You can't compare. You're kind of selling as is. Of course, anybody can be more successful than a previous owner, but you can't sell based on like what you could do. You generally, it's like buying a stock, buying on what it's really worth, not what it could be worth if these things happen. Agav, where are you in the U.S., Agav? Or can you check out DVN? But getting back to this, so the 1031 exchange is really beneficial. So you can you don't pay taxes on the gains from your commercial real estate, but you could do that with residential. So if you own residential property that you live in, even if you rent it out, I'm pretty sure this is the case, but if you live in it full time as a resident, not renting out, in 2 of the last 5 years, then you can get a tax deduction on up to 500,000 of capital gains. So if you bought it for like 300K, sold 700K, that's a $400,000 profit. So you have to probably pay 100,000 in taxes. But if you lived in it at least 2 of the last 5 years, you could sell it and you wouldn't have to pay any capital gains. Because some people, like in my case, we owned a property in Manhattan, but we moved out to California, but we still rented the property in Manhattan while we lived in California. We rented in California, but we were able to because we lived in California for 3 years, but we lived in that New York property at least 2 of the last 5 years. So we kind of just hit the. So you get $500,000 of a tax kind of write-off. I think if you're married, $250,000 if you're single. Okay. It seems like the more I talk, the more people stop DVN. DVN. This is pretty much how I'm doing my the terminal value is based off of the Gordon growth model. Or dividend discount model. That's how I calculate the terminal value. If you want to recreate this, or you can just be a Patreon member and get it free. Okay, DVN. The Devon Energy. Okay, what is it? It's a Oklahoma oil and gas company. DVN. 4328. DVN. It's a pretty high whack. Three. So it's pretty much a flat 3. Let's go with the higher whack. Probably get a nice dividend. Nice yield of $2.87. Okay. Okay. I don't know why that bothers me so much, but can you explain WAC and what a good percentage would be? So this looks like it's priced pretty at the right level. I'm getting 49. It's trading at 43. Even with the higher WAC, and you get a really good yield. They've been around a long time. They're really 43. So they're trading at 2005 levels. Look at, they got real low. They got down to $9. I could explain WAC, but I know a ton of people are gonna stop watching if I try to explain it. But I'll explain anyway. So, the easiest way to explain to understand WAC is just like okay with trying to think of the most straightforward way. It always takes me so long to explain these things. Well, okay, so I'll just tell you what WAC is, then I'll give you an example. So it's the cost of equity and the cost of debt. And weight of equity. And to help, sorry, that's my middle name, Brian. No, I like talking about this stuff. It's just that people just, I don't know why they usually have, they don't like it. It takes a long explanation, but so this is what it is. I'll just tell you. Is there a website that gives you the cost of equity? Oh, there is. Oh, that's a WAC. Oh, the cost of equity. I used to calculate it from like in my videos, like the WAC. Now I've been taking. Well, I could calculate the cost of equity. Okay, I'll calculate the cost of equity. high beta. Okay, let me just tell you the formula, then I'll calculate it. Okay, this is good because this is very hard to. So you gotta figure out the cost of equity, cost of debt, weight of equity, weight of debt, and then you combine them. So cost of equity, the standard cost of equity is 10% because the market generally goes up 10% a year on average if you looked at the past 20, 30 years. So 10%. Let's just do, we could do a quick, let's just pretend the company is 70% equity. In my earlier videos, I used to go through the whole whack and tell you how I came up with the cost of equity and how I kind of like eliminated a lot of those things just for okay. Here's a trivia question. Okay, now that the cost of equity is 10%, which I think would be a standard thing, what do you think the cost of debt would be if you just had a guess? And I mean, if you want to try to guess for this particular company, throw out a percentage. What probably would the cost of debt be? What do you think? Throw out some percentages. See if people are, because I know some people must know what I'm talking about. Like, would it be same as the cost of equity, 10%? Would it be higher than 10%, like 11, 12%? Would it be lower, 9, 8%? Yeah, I think you hit it. You nailed it. 4 to 7%. Generally, I'll go 5% because they probably have a lot of debt from the past that's still at a low rate. So the cost of the weight of debt has to be 30% if we know the weight of equity. So this is a simple formula. You take the cost of equity times the weight of equity plus the cost of debt times the weight of debt. Because this company has been around a long time, right? So I would think their cost of debt would be lower. But but let's say you were starting your own company, right? The cost of equity is really hard to understand. But the way I try to explain it, like the real simplified version. But I did miss something in this formula. Do you know what I missed? So I'll show you how to calculate it, the WACC from scratch. So say cost of equity is 10%. And then the beta. It's a pretty high beta, 2.22. Let's keep it at 2.22. So you do the cost of equity times the beta. They have 6 points. Actually, so as of 9:30, they have $6.5 billion of debt. $11.6 billion of equity. So they're 36% debt. 64% equity. So their cost of equity is really high. Because, and Charlie Munger, I think Charlie Munger used to talk about how WACC was kind of didn't make sense because it's pegged off of the beta, and a beta is not a good measure of a company. But that's a different story. Okay. So the cost of equity would be 22.2%. Now to get to get the real cost of debt, we would need to go through their energy 10K and calculate. I mean, it's not that hard. We just need to get the data if they even provide it. The reason I'm using a 10K and not the 10Q is more current. So I should use a 10Q, but the 10K has more info. Usually, sometimes 10Q doesn't have a lot of info. So to find a balance sheet, I just search current assets because that usually that term isn't that common. Like if I search another term, there's too many hits. So okay, so I want to find a balance sheet. So I want to find they have. That's a good way to check. You can see the debt, $6.5 billion, and you can see it's 6.2 billion long-term debt, and then the short-term debt. If you sum it, it is pretty close. So I mean, the reason to do this, because the number should be hopefully fairly similar to the ones you find on these websites. But if it's not similar, then it gives you a lot of information, right? But if it is similar, then you can still, you might need to adjust the numbers. Let me show you. So calculate the cost of debt. So we'll use this column here. because that's more current. That's as December 2022. 485, 73, 90, 25. This is just their debt. And the only way to find out the cost of it is we have to get the interest rate they pay on their debt and weight it against $12.50. And it's just a good exercise. It helps you learn things, how things work, and yada yada yada. Let's see if I typed that in correctly. $6,466. Yeah, because it's negative 26. I didn't type in. We don't need that. I probably wouldn't go through this whole exercise because you could just pull up the numbers pretty quickly, but I think it's just good since you asked. You can see the process, and I'll show you why this can be beneficial. I'm just typing in the interest rate for all the debt. 4.75. Now this says 103 million of net premium on debentures and notes. Do you guys know what debentures are? Oh, Khaled, what's up? This is one of my favorite subs right there, Khaled. Does anybody know what debentures are? Let me know in the comments. Anyone? We could estimate, I guess, the interest rate. Can you do evaluation on? Khaled is the most generous sub. I think he donated as much as all my other subs combined. So that's really nice. Okay. I guess we could just do. Anybody know what debentures are? If anybody. No problem at all. I'm almost done with this. I was just showing how to calculate the WACC. Okay. Not that you would need to go through this whole exercise, but I think it's interesting. The benches are like debentures. Yeah, like bonds. It's just unsecured debt backed by the company. So like your mortgage is secured debt. It's debt backed by your home. So if you don't pay the debt, they can take your home. debentures are unsecured debt. So the only collateral is just the promise that the company issuing the debt will pay it back. Yeah, they're bonds. So the average. So all I did was I took the outstanding debt of the company, and then I put the interest rate they pay on that debt, and then I weighted it, and I got an average interest rate of 5.77%. So the way so the weight of debt is just a calculation. It's I need to add a column because so okay. The weight of equity is see, I told you it's so boring. People don't usually stick around. I'm really short. Okay. So I wonder if the person who asked me how to calculate WACC is still watching, because it's such a long. Okay, the weight of debt, cost of debt. Okay, so the cost of debt is 5.77%. The weight of debt is just the difference in the cost of equity, and then the WACC for the company is it's going to be a lot higher because we're calculating a much higher cost of equity. So we're at 19%, where the website said 11.5% because of the high beta. That's why beta really influences. So you might want to cap your beta, or what I said, like if you were doing this exercise and you want to get the cost of debt, you can look at previous debt and say, well, like the earlier debt, the debt that's due in 2023 at 8.25%, maybe you could remove that, saying that's probably, when rates were really high back then, even though rates are higher now than they were 3 years ago, they're not going to be paying 8% interest. So maybe you can remove that and lower the. That's why. That's why sometimes you go through this exercise to get a sense if the WACC is probably artificially high. Maybe you could cap the beta at 1.5, and you get 14% WACC, or go through other exercises. I don't know. Okay. Wow, God, so generous. There's a person here who asked for the WACC that GRRR. Yeah, I'm gonna visit Netherlands one day, so I hope to meet up. I'd like to visit. There's a few people I know who live in the Netherlands. Okay, GRRR. Still sticking around. Okay, thanks. You see, I told you it could get really boring. I mean, for me, it's not boring, but I could see why it could be boring for other people because it's hard to. There's so many. It's hard to focus when you're not really exactly sure. And then when I keep going past a point, not that you don't understand what I'm saying, but there might be a few points that you totally didn't get. And then if I'm moving on to another point, it makes it just. Oh, this is going to be a tough one. Yeah, Khaled, I'm trying to get more into swing trading and short-term trades. If you visit the Netherlands, you're most welcome, my friend. It would be great to meet up. Yeah, I'd like to go. There's a few people I want to visit. There's another YouTuber, the financial storyteller. He's in the Netherlands. I don't know where. I think he said like a half hour from Amsterdam, but so that whole exercise with calculating the whack. Now I just go to this website to pull it up, but you might want to do your own due diligence because sometimes these websites aren't that accurate. Well, bonds depends what type of bond, but this is a bond? This that you told me? This is not a company? Because bonds should be easier to value than a stock, unless it's a. Oh boy. $60 million to $100 million. I think I need to use this model. I can't really use my. Let me. Yeah, I got this model. I can maybe value it. The other one, not so much. This is hard. Oh boy. Okay, this gives a little more information. Oh boy, how do you estimate this? Okay. Okay, they have a projected to grow to 115 million. Let's just do what kind of company is this? Software. Okay. I would if they can grow to 115 million as projected, I don't think $4, but I could see $3. I could see it being worth $3. It's in the UK. Why did they? But do you know why the revenue went from like 2020 to 2021? It was in the low 40 million range, and 2022 was cut in half, but it came back in the trailing 12 months. That's kind of odd. Gorilla Technology. Does anybody know anything about this company? If anybody could do Google search, why did revenue get cut in half? Growth Technology is not established. Yeah, we go back to Gorilla. Okay, let's do the other one. JDE Pete's. You sure don't make it easy on me, do you? It's a tough. Oh, it's not a. It's 11 billion market cap company, so that's not too bad. JDP. Oh, is this a Dutch company? Is that? They're in euros, so it is probably Dutch company, right? Oh, this is Pete's Coffee, the Dutch arm of Pete's. Because I know Pete's Coffee. Oh, this is just their Dutch version. They probably have a separate. Wait, I didn't know Pete's was a. That's interesting. Okay, that's 24.7. Did anybody else know that Pete's is a Dutch company? My mind is blown. I can't believe. Well, the euro and the dollar are like identical, right? Aren't they like, I don't even need to do a conversion? Well, very close. 8.6, 8.9, 9.2. Looks like a pretty good. Looks pretty good. I'm at 47. They're trading at 24. Fred, what kind of question is that? Well, are you the Fred from who drives Uber? Are you the same guy? Wait. Alfred P. grew up in the Netherlands, where his father owned and operated coffee wholesale. Oh, so was no. Okay. Wait. Did anybody know this? I feel like my world is upside down. Pete's is a Dutch company. It's not a U.S. I thought it was a U.S. company. Pete's is a U.S. subsidiary. So, but they started. What? Okay, here's it. 2022. Profit. Revenue 8.1 billion. I had to leave for a second. Is this still live going on? Okay. Okay, CPG Europe, Larmia, Pete's. So I guess Pete's is their U.S. right? Is that am I? So the 1.1 billion is just U.S. only. So are there coffee shops where you live that are called Pete's, or is that just in America? Pete's is the city of JDE Pete's. No, yeah, I get that, but are there actual stores in in the Netherlands, Pete's Coffee, or is that only a U.S. thing? It's called, or is it called JDE Pete? Pete's is a U.S. company, however, it is a subsidiary of Dutch parent. Uh, hmm. Well, yeah, I guess you learn something new every day. I never knew this. Um, what country has Pete's coffee? The nice thing about coffee is it's kind of it's. I mean, almost all around the world, people drink it. It's not like it's not like because certain food is in like some countries only have certain food where kind of coffee is anywhere. I buy Pete's coffee regularly. Are you guys considering shorting that brand? What do you live in the United States? I wouldn't. I wouldn't short Pete's. I don't see. I think it could be a good. It's only been trading since 2020. It started out at 45, right at the worst time, COVID. Well, look at this. Oh, it's really gotten crushed. Look at this candlestick. They probably pay a nice dividend. Lots of free cash flow. 3%. That's not bad. It's hard to read these. I mean, it's so low. It's down about 50%. I wonder why it's down so much. It was 45. Now it's down to 23. Yeah, I remember this. Pete sold his business to Sal Bonavita, but remained working with the company as a coffee buyer until in 1984. Jerry Baldwin, Starbucks founder, bought Pete's 4 locations. In 1987, Baldwin and his Starbucks co-investors sold Starbucks to focus on Pete's. So Pete's is true coffee. Starbucks is a little more diversified. They seem to do a lot more, but Pete's has snacks and stuff like that, but it's more I think it's a higher quality coffee. Would you guys say that like Pete's is probably a little more higher quality than Starbucks? But I know people are very dedicated to their coffee. So if you like Starbucks, you probably love it, and you wouldn't go anywhere else. Same thing with Pete's. Starbucks does a better job at advertising. They have a much stronger brand. But I know the stock has really been struggling. Yeah, I think shorting is a bit risky. Since Pete's started trading, it's down 47%. Well, Starbucks is up 19%. Oh, I thought Starbucks was down. Wow. Well, Starbucks has done really well. I remember when I used to run, I used to run this math tutoring company, and I did this this kind of like it was like a course, like a not part of the math tutoring business. Just I had a 1 week class called Stock Market 101, and there was like 15 kids in the class. So it was like a 4 week class. So we had 4 classes. So I bought, and it's back in, I think, 2014. And I bought 1 share of Starbucks. So I gave everybody like a screenshot of my E-Trade account with that 1 share. And we would look at like each week how the stock did, the percentage increase and decrease each week, and the kids had to predict the stock price. So at the end of the first class, you had to predict the stock price for next week, and each week you did that, and whoever gets closest, gets points. So we would do that, and then I would explain obviously different things. Like one class was dividends, so I would explain how the dividends worked. But too bad I didn't hold it. Well, it was only 1 share. It was just for the class. But it ended up coming, COVID ended up coming down to the 60s. Now it's 90s. Okay. It's not up that much, I guess, as I thought. Depends when you've got it. So if you got it in 2005 at 13, you'd be up 500%. Plus, you would get all these dividends. They did a lot of stock splits. I mean, if you bought it like in the 90s, I guess. It's kind of hard to hold it for 25 years. It's real hard to hold a stock, because if you put like $1,000 into a stock and it was $20,000, it's kind of hard to not sell when you're up so much. So what do you guys think? Pete's, the thing is, there's less kind of like there's less activity on the OTC than like the Nasdaq or something. Let's see about the short interest. Oh, they probably wouldn't have it. Maybe they do. No, I doubt they have it. Yeah, short interest is not available. Um, yeah, there's no short. It's hard to get like information on the stocks that trade OTC. Who are the other large coffee chains? Dunkin' Donuts, I guess. Keurig is Dutch Brothers. I don't know. You mean, can you trade after hours? You can't. Okay, the feature allows users to trade securities before the market opens and after it closes, providing. Oh, I think you can. I think you can trade pre-market and post-market on E-Trade if you apply, if you ask them. But you have to get set up. It's probably a certain account. After hours trading, traded. However, investors should be prepared for their orders to not be filled as quickly due to low trading volume. Yeah, them and they have to change your account. But I don't think anybody can do it. You probably need to have a certain amount of like money or. But I don't know. Maybe they just let anybody. Does anybody trade after market on E-Trade? I never even tried, but I think you could. It says it right here, unless I'm missing out on something. So what's the best? Okay. I'll be right back. 1 minute. Did anybody notice I got a hair transplant? They cut the back of my head. They got a strip of skin and they put it on top of my head and put hair. And E-Trade lets you trade pre-market, however, only starting at 7 a.m. unlike other companies that let you start. I guess I would just switch brokerage accounts. Okay, so if you want to do a short squeeze, here are the high short interest stocks, the float, how many shares are in the market. So I guess here's the outstanding shares. So you'd want float to be a lot lower than outstanding. The lower the float, the better for a short squeeze. Here, Dyne Therapeutics, half the shares are on float. So that means the other half are locked up. Look at Sirius. 3.8 billion shares, but only 600 million are on float. Siri. That could be a good one. Well, I use this site, this NASDAQ.com. Back here. This might be a short squeeze. SIR. I'm trying to earn my rent. Huh. So why do you think Sirius? Because they have positive cash flow. 18 billion market cap. It used to be so much higher, like 60. I guess. It got pretty low. It was like 10 cents in 2009. There's a lot of trading activity. That's crazy. I wonder what happened. Was that earnings? Did they that looks like a short squeeze right here. That was in one day. It went up like 50% in one day. Damn, how do we identify this stuff? How do we figure it out before it happens? That's July 2023. So this is around this time. Maybe it was when it, so that was July 20th. So that was, it was 14, the days to cover. It would take 14 days to cover the shorts. It got up to 200 million, 219 million. It's come down though. It's down 166 million. So maybe it's not as, I guess we missed it. It fell below 4. And they're still paying a dividend. Oh, so they've been losing subscribers. Yeah, I don't know. It did get up to 7. Then it came down. I wonder if lots of trading volume in July. It got up to 47 million. $23 million in September. You know what I think is due for a big run up is pets. Look at this gap down in October. I think it's trading on its all-time low. Well, maybe not quite its all-time low, but oh no, it is. It was up to $50 at one point. Look how many red days in the past month. It's almost every day is a red day. It's bound for a surge. The problem is their revenue has been pretty much flat. although it is finally up from 2023 to trailing 12 months. See, the revenue is up to like 70 million a quarter. It was down to 50 million. And they did have negative free cash for the last 2 quarters, so I don't know. I think this could be a big run up. I don't know. What do you guys think? But they cut PetMed Express. I mean, look at the shorts. It's the 12 days to cover. I'm thinking about going all in on this one, but I'm a little scared. My wife may divorce me if I mess this one up. Do you guys follow the RSI? Yeah, pets, exactly. The 14-day RSI is 20. So the standard thing is below 30 is a buy. Above 70 is a sell. So I mean, look at it. It's at 21. I'm just so scared because I'm down like 50% on this one. FWBI. If anybody remembers MSS, I was telling you to buy it, and it's up like about 150% in the past week. FWBI. Well, it doesn't really have. They have a lot of trading volume. FWBI. I don't. Wow. They've done a lot of reverse stock splits. A biotechnology company. Yeah, this is the kind of company you got to really time. They're pre-revenue, so obviously they're not going to be. What stock has a Infosys, a 3.59. eBay has a 13 RSI. Yeah, this is tough. This is a tough. What's the FWBI? A 55 RSI. So not good in that category, but isn't the market closed on Monday? Is a holiday, right? But the thing is, you can't, because it's hard to know when to buy and sell. But when I sent out the when I set on I wrote in one of my comments on YouTube, when MSS came down on this day, when it crashed, I was saying it's going to be it's at a really good value now, because they make money. So it was $2.50 when it came to this level, and it came down to like 80 cents. Now it's back up to $2. I have a sell at $3, so it's hard to. You just got to time these things, but you can't. You can't sit on it too long, but you can't after like a week sell it at a loss, because you can't. Sometimes you just got to deal with a little pain. But I don't know. Okay, one day we'll figure it out. When EQNR. It's a pretty big company, 75 billion. EQNR. Doesn't look. EQNR. Equinor. So I'm at 22. How often do you? I don't really short much. I don't remember even the last time I shorted something. EQNR. A pretty good RSI. You really have to time it well, shorting, because if you miss even by a month or two, so when you buy a stock, you can wait, because even if you're losing money on a stock, it's going down, you don't lose anything. But when you short, you get hit with all that interest. So the short interest is 10 million. So not much is shorted. I mean, it's all a little gamble. So nobody knows. You can't predict it. You can't predict the future perfectly. It's some gambling involved, and that's unless you buy like and you put in a money market account. There's no gambling there, but. But even buying Microsoft there's some gamble. It's not much though, but but I like gambling. I like going to casinos. Can you? SoFi, it's just so hard to. I just don't understand how to value banks. It just because you can't really look at the financials. It's less clear. Like look at that free cash flow, negative 9 billion. It's just very hard to even understand. I think it's a good investment, but I can't really explain why. New Holdings is it's a similar type company, and I'm doing really well on that. I'm up like 150%. I probably just would ignore free cash flow for banks because it doesn't really make sense. But you see, at least new has positive net income. I think net income you could look at for banks. Yeah, new. I'm so happy. I put like 25K into it, and I'm up 150%. That was one of my best. really happy about that. Yeah. So SoFi. Pretty high RSI, 53. So So what do you guys think of the RSI? Do you think have you shared personal favorite holdings of your portfolio? Well, I've always been really bullish on Meta and Costco. Those are probably I've always said those are my two favorite stocks to buy. And new I'm up quite a bit. ET I'm up quite a bit. I'm down on Johnson & Johnson. I sold Intel at a loss. Berkshire Hathaway, I'm up a lot on that. I'll open up one of my accounts. It's really, I don't know. I don't want to say, I feel like I got lucky with Meta. Like my portfolio wasn't doing that great. And then with Meta, it really took it to a new level. So yeah, I really lucked out on Meta because I remember when I sold my business in 2021, I was it was at the end of 2021. I didn't get the money till the beginning of 2022. So January 2022, I bought a lot of things. Maybe I should have waited. So before January 2022, in August 2023, I bought Disney. I put like 45,000 into Disney because it was just down too low, Disney, and I really thought it was too attractive. So I'm really happy with that, up 30%. Spiders, I always put into spiders when I'm not sure what to invest in. So I'm only up 11% with my spiders. Abcelera, I've been buying. The first time I bought was July 2021. I'm down 67% on that. I put 10,000 into it. I lost 6,700 of that 10,000. Then I put another 10,000 into it. And then I'm down half on that, 45%. And then in June, I put 20,000 into it, and I'm down 3,000 on that. Then a few months ago in November, I put another 10,000 into it, and I'm up 1,000 on that. So for Upseller, I'm down 27%. So I put 50 into it, I'm down to 37. I don't know why I keep investing in that one. And pets, I'm down 59%. I thought 13, I thought was a good buy for pets. I really did. But then with the money from the sale of the business, I put 100,000 into Meta and 100,000 into Johnson & Johnson and 50,000 into and Johnson & Johnson, I'm down 8%, which sucks. ET, I've gotten dividends and I'm up 68% on that. So I put 50 and I'm at 84. Meta, I was down almost 70% at one point, and now I'm up 40%. So I'm happy with that. I was thinking I was thinking of putting everything into Meta. And then when I was I put it into Johnson & Johnson. Look where it is now. Meta's up 40%. New's doing really well. I put 25 into New, and now it's almost 60. I'm up 145% on New, which is awesome. Asmin, what's up? And then so in my main account, I put I invested in four stocks. So I'm beating the S&P 500 in two. So I have S&P 500, it's up 94%. This is all in 2017. Like in 2017, I bought one share of Berkshire Hathaway, March 2017, and I'm up 133% on that, which is nice. S&P, I buy it every time I have dividends roll in. So I'm up 94%. Meta is the best, up 212%. And this PDP, which is an ETF, that's up 60%. Yeah, it's a new record. By far, it's a new record. Okay, Himax. Himax is a good one. Wow, it's down to 545. God, 545. I can't believe it's down so much. That's a good company, Himax. $11.8. buy a home. Well, I don't know if you need a book for a home. Now, I would definitely try to pick a home in like a community which is obviously safe, and you can look at home values over time. But in most neighborhoods in like Canada and the US, there's plenty of places that home values generally go up historically. And I'd rather get a home like like you know how like in some neighborhoods you can get like a really big home for $300,000, and then $300,000 in another neighborhood will get you half the size. But in a really good neighborhood, you there's a much better chance of the home price going up. Um, but you probably don't need to do as much research as you think, because it's a pretty liquid market. It's not like buying a business. It's home values are pretty consistent. Like it's public information, so it's not any real estate agent I think can give you a. You're in Canada, right? Is that taxes is a big part of it too. You might want to like because if you're in a home with really good schools, your taxes may be really high. 129, 37, 73. I'm gonna even. I made the model. Well, I'm confused. Hi, Max, right? I'm doing the right one, right? We're talking about the Taiwanese semiconductor company, right? But I think equally as important to getting a home is the interest rate you pay. Because if you can lock in a low interest rate, it could save you like $100,000. Of course, it's a bit about timing. So, and you need good credit too. If you have bad credit, you're not going to get a good rate. it's Himax is a screaming buy. Even a worst case scenario, it's like it's really really undervalued. Let's see what Simply Wall Street. Well, they're overvalued stock. Sheesh. 3 analysts have it at 765. I wonder why they're performing Look at their Himax. They could afford it. A 9% yield. They're well, maybe they can't afford it. How many shares outstanding do they have? 175 million. Okay. What's the yield? 79 million. Well, actually, no, they can't afford it. They can't. Oh, it's 48. Oh, 48 cents. Oh, they could. They could get. They could afford. They can. They could. Well, they can afford a 40-cent yield. So it's like 8% probably. 7% yield. They could afford a 7% yield. But they're cash flow positive. They're not like struggling. But what? According to Seeking Alpha, Himax recent financial results showed a decline in revenue and profits, but their automotive. Yeah, I think their revenue is down a lot. It was 1.5 billion. Now it's 980 million. So it's been pretty flat the past 4 quarters. It's kind of like a gamble. Like, do you think this is the? Do you think they'll get back on to a growing company again, or do you think they're going to keep declining? It's the country risk too. If they weren't like in Taiwan, there's that risk being in Taiwan with China. The conflict with China and Taiwan. And China is such a big consumer of everything, and if they're at war with each other, it kind of like, I could imagine a lot of Chinese consumers don't want to buy Taiwanese made. Like if it's made in Taiwan, they probably don't want it. It's kind of like how we like to buy. We don't want to. I don't want to buy something made in China. I want to buy something made in the United States. But if it's cheap enough, we'll be like, fine, I'll buy it if it's made in China. Where I think a lot of people in China are probably like, I don't care what the cost is. I'm not buying Taiwan. So, But personally, I do think it's a good. It's at a great value. I do think it's a good company, and I think there's always conflicts. There's always issues uh, with countries, but business is business, and I think, I mean, it's getting. Well, it's, I mean, it's so volatile. And you could see it's trading below IPO price. I mean, and it was in the teens at one point, and now it's trading. Yeah. What's the? I mean, what do you think of Taiwan Semiconductor? If you like Himax, they're probably most informational stream. That's too nice of you, Grief. Not many people watch it, but look at Taiwan Semiconductor. If you think NVIDIA is great, this is the company that that manufactures the chips and the wafers for NVIDIA. NVIDIA designs, because they are fabless, they design the semiconductors, but this is the company that actually makes it. They're the largest foundry in the world, and they're trading below. They're trading below their come on. But so 2 years ago they were trading higher. Doesn't upset you that NVIDIA is so high? Doesn't it piss you off? I used to feel this way about Tesla. It used to get me so upset when Tesla went up. Guys, really. It's the third largest company in the world. It's Microsoft, Apple, NVIDIA. It's crazy. It's madness. $45 billion of revenue. $1.7 trillion market cap. 45 billion of revenue. Meta is triple the revenue. And Meta is 40% smaller. Not only is Meta triple the revenue, but they have the best revenue because it doesn't. to get revenue, for Meta to get revenue, it's free. They don't do anything. People just buy ad space on their platform. The platform's already built and people already using it. It's the best revenue. Google has the best revenue. These are what newspapers use to make money. It's the product is out there. NVIDIA works hard for that revenue. It's not easy. It's a very, very difficult thing to build semiconductor chips. To build anything, to make anything, manufacture anything like a car, it's very expensive and time consuming. And a lot of like insurance and a lot of legal things, a lot of everything, infrastructure. Google is the same size as NVIDIA, and look at Google's revenue. It's 6 times NVIDIA's revenue. 6x. 300 billion. I mean, Walmart is actually the most revenue in the world, but it's not that good revenue. It's not like it's I mean, revenue is not equal. It's very expensive revenue. It's because they have to buy so many products. It's not like Meta's revenue is like free revenue. It's just cash, all cash. Very little like overhead. But I don't know. NVIDIA, what a ridiculous company. So annoying. But don't short it because you could lose a lot of money. So. Oh, Hims is back to $10. That's interesting. I didn't know it was back to $10. Hims. None of the summer Hims. Hims. I used to use the hair product for Hims. I stopped buying it because it wasn't really doing anything. Yeah, Hims seems like it could be. I don't think NVIDIA will take the market down with it. It'll bring it down a little bit. I think like Apple will take the market down because Apple is just such an important part of our culture. Their products are used by so many people. But Nvidia, I don't know. At least that's what I think, but who knows? So it's Buffett sold Apple in Q1. Yeah. Yeah. I always get annoyed. When Apple goes up, that I don't own Apple, but I own Berkshire, which is kind of like owning Apple because half of Berkshire Hathaway is Apple. So him seems pretty good, right? It's a SPAC, so it started at $10. It went up to 22. So I think the resistance. $350. It hit that 350 level. But I think we missed the run up. I think there was this. It's like a $5 resistance level here. It ran up to 10. The resistance came up a little bit. It came up to $6. So I think it could run up to 13, 14, and then the new resistance will be like 7, and then run up to 20. So I think you might have missed a lot of upside on HIMS. I do think there's more because it'll probably break through this level. And strong revenue, really strong revenue, and they're finally generating positive free cash flow. So this could be a winner. This could be a big winner. RSI of 63. What's the biggest danger of shorting stocks? I mean, the same thing as the biggest danger of buying stocks, losing money. I mean, of course, you can lose infinite amount of money with shorting stocks, but you're probably not going to lose infinite amount of money. But yeah, there's definitely but the thing about shorting is even if you're right, even if the stock goes down, you can still lose a lot of money if you just don't time it right. Like with Meta, I waited 2 years for my Meta to come back, and I was up 40%, even though it was down 60% at one point. But when you short, if you don't time it right, you'll have an opportunity to get your money back, even if it does come down, because you have to pay interest and things like that. An uptrend or bull market, the RSI tends to remain in the 40 to 90 range, with the 40 to 50 zone acting as support. During a downtrend or bear market, the RSI tends to stay between 10 to 60 range, with 50, 60 acting as resistance. So I think we're getting close to the support level for HIMS because we're at 63. And I think it's just how stocks, move up and down. It's just like any stock, any normal stock, not like Nvidia, but like okay, like with Meta, it had a like it's hard to tell, but like it had a really nice run up to 2018, 175, and then it went down 20%. But that was a pretty short drop over a month. And then from December, then the next month it came back to where it was. So went up about 25 or 30%. And then March 2020, it went from 217 to 150. So down like 35%. And then it doubled. I mean, but this was pretty extreme. So stocks don't just go straight up. Let's look at Apple, which one of them. If you hold a good stock for 20 plus years, you're going to make money. Like if you bought Apple in 1980, even if you sold it right here, right after the crash, you're still up like probably like 1,000%. But look, it went up way up there and then came down like 90% in 2001. And there was 2008, it had a big run up. Then it went down 40 or so percent. 2008. Then it went from 3 to 20, so it went up 700%. Then down 50%. That was like in a few months, it went down 50%. Then from 2013 to 2015, so 2 years, it went from 15, so double in 2 years it doubled. Then over 6 months, it went down 30%. So when you look at it in 5-year increments, it doesn't just go straight up. But over the 30 plus years, it does go in a straight, not a straight line, but it does go up overall. I mean, it looks low right here, right? $37, 2019, but it's like it's up like 5,000% from 20 years before that. So it's not a straight line. I'm mad as hell as Nvidia is up the way it is, especially when I sold at 300. I know. And when Nvidia came down, I mean, I guess if I knew, I would have just. When Nvidia was up here in 2021 and it came down like 50%, I thought that was it. It was never going to go back up again. Then right away, it's just ridiculous. Stock, you'll never see a stock look like that in the long run. It has to come down. I mean, Meta's up like 300% in 5 years, but it looks like it's flat next to NVIDIA. Look at NVIDIA. It's up 1,700% in 5 years. Maybe in the past 2 years, Meta's close. Meta 135% in 2 years. NVIDIA 200%. There's like nothing. I wonder SMCI how that compares, because that's up, I think, more than NVIDIA. Well, look at SMCI. In 2 years, it's up 2,000%. You're 20x'd. In 1 year, it's up 900, almost 1,000, 10x'd in 1 year. Sold NVIDIA and Tesla in 2019. It was happy with 200% gain. Now, it pisses. It's frustrating, right? Isn't it so frustrating? I'm still mad I didn't buy more Meta when it was down. Like, I'm not happy you're not happy when you make money. Like, you made 200% and you could have made 500, 1,000%. Did I buy anything in a winter dip? When did I buy? Nothing. I don't think I bought anything in the past few months. I can't think of anything significant besides S&P 500. What did I buy? Let me see if I can. This is my other. Amazon sucks. I bought Amazon in 2020. So in 4 years, I'm up 36%. It's not. Apple's up the most. It's been coming down. I finally bought Microsoft. It's a little late to the game with Microsoft, but Pfizer is hurting me a little bit. I told you guys about MSS. It's up almost 200% in the past week or two. I made a blog post about MSS. Google, I'm down. Costco is great. Costco is one of my better investments, up 100%. ASML, probably very overvalued, but amazing company with an unparalleled. On YouTube, I said I'm doing a swing trade on MSS. I'll try to do more of those, but a month ago, I'm buying MSS for a swing trade. 1 month ago. And it's up about 200% the past week. It went up 15% on Friday. Well, yeah, I'm up. I just showed you. I'm up like 20%, but I mean, I made the post. They had bad earnings, so the stock went down like 80%. Um, I didn't catch the bottom, but it ended up bottoming out at like 70 cents. But now it's back up to almost $2. So I'm up 20%, but I mean, I guess I could have waited. If I would have waited a week, I could have caught it much lower, but it's up just since 2.7. It went from $1. Yeah, it's doubled in a week. So I usually don't do swing trades, but I'm going to try to do more swing trades. So I'll post pets. I'm doing it pets. I'm going to maybe go in heavy on pets. I think we should see a nice I mean, pets, I'm already down 50%. I think I timed it wrong, but that doesn't mean anything. I'm still gonna. I mean, I know it's hard because I talk about like a ticker every day. So I mean, which one do you buy? So there's no way to like really know. But I do try to say if I'm buying something. I make videos a lot, but most of them I wouldn't buy. Like people said, "Oh, I lost so much money on Zim. Why did I listen to you?" I'm like, "Well, I didn't buy it. I'm not going to buy every single stock I do a video on. I would never buy Zim or a marine shipping stock. Too volatile. 6, 9, 11. Oh my god. You're too generous. I almost feel bad. You're nobody else donates except you, but it's really nice. I really appreciate it. Something's wrong. I messed up something. Oh my god, 366 billion? What? Did you guys know? I never even knew they were that big. Holy cow. They're a Dutch semiconductor company. Wow. 366 billion. That's a big company. Okay, I'm trying to it seems overvalued. I'm at 512. But you can see they have half the revenue Nvidia has. Look how much buying activity there was in the 90s. Now it's like hardly anybody buys the stock. It's trading at an all-time high. A 70 RSI. Look how much they're growing. There's a YouTuber, Bulldog Trading. He streams 24/7, so he's always streaming 24 hours a day. Okay, I'll be right back in 1 minute. So how do we compare the last 30 years of revenue? This website, yeah, Finbox, it's free too, which is nice. I only use it for the whack calc, but I guess you need. I guess those are free. The whack is free, but I guess you got to be a company. I don't know if this site will go back that many years. ASML. that ASML. Oh, you got Maersk, the shipping. I don't know. I wasn't planning on Canada. I would like to go. I've never been to Vancouver before, but stock price, valuation. Okay, so here's the revenue. I wonder if they. So hard to tell. I don't know what tools I use. I usually use these tools for the videos, but when I pick a stock, every single semiconductor manufacturer requires ASML technology. They are useless without it. Every single semiconductor manufacturer requires ASML. They are useless without it. ASML. Yeah, the revenue has gone up quite a bit. Okay, it was 8 billion in 2023. Okay, oh, these are quarterly numbers. This is their quarterly revenue. It was $250 million in 2009. Yeah, it looks really good. I wonder. Okay, here we go. We can. I'll show you what you requested before. You want to see an overlay of revenue. This is ASML. Oh, maybe you can. I'll answer your question a bit. The tools. I have. Sometimes I'll buy stocks even if they're overvalued, and I'll sell stocks that are undervalued. So it's I'll explain how I think about it. Let me just. I don't know if I can overlay it, but no, I forget which is which. Okay, so the top is NVIDIA. The bottom is ASML. So NVIDIA's, it goes to 20 billion, and this goes to 10 billion. So NVIDIA is obviously a lot higher revenue. And their growth is really aggressive the last few quarters. Where ASML has been more of a steady increase. So I don't know. But investors look towards the future. So if a company's putting up amazing numbers, 30 years stock gain, okay. Well, then it's going to be not even close. ASML is up 4,500%. NVIDIA 45,000%. Wow, imagine 45,000%. That's 450x. So if you put $1,000, you'd have $500,000. $1 million, 4,000. It must be the biggest gainer. But ASML has been around longer. ASML is public 4 years longer than NVIDIA. Why did it change so much? So it'd be like if you in 2024 years, if you had, I mean, who even knew NVIDIA? And I didn't even know NVIDIA in 2015. I barely knew NVIDIA. Like, I mean, I may have heard of them, but who would have? I don't know. It's an interesting website. I never really looked. So what's the next NVIDIA? Is it for let's see what ASML. I think pets. I think they should have a lot of upside. I think it could 4 or 5x. But I wouldn't hold it long term. I don't think it's a good long term hold. But I think it's really bottomed out, and they're not a they're a profitable company. They do generate money, and ASML, which advanced semiconductor lithography, is Dutch multinational content. 84, I'm specialized in development of photolithography machines, which are used to produce chips. It is a large supplier of semiconductor industry and a sole provider of the world. Are you? So it's the biggest European company in the world. Well, in the world, it's the biggest European company. So Microsoft is obviously number one. Apple's two. Saudi Aramco, Alphabet, Amazon, Nvidia, Meta, Berkshire, Eli Lilly, Tesla, Taiwan, Broadcom, Visa, Novo Nordisk, JP Morgan, Walmart, and MasterCard, LVMH. I don't see ASML on the list. This is probably more current. Okay. Here's ASML. The 24th largest company in the world. Costco. Nestle. Wow, I didn't know Nestle was that big. Salesforce. L'Oreal, Netflix. Hermes. Baba. Pinduoduo. Well, they've come up a lot. Remember, they used to be low, right? Didn't they? They peaked in 2021. Yeah, I sold Baba. Oh, they weren't. I thought they were much lower. They supply farms, right? Farmers use them for. Oh, they're in Dublin? I thought they were Chinese. Okay. It is a Chinese. Okay, Chinese retailer. In traditional agricultural industry, you can do the. Baba. Baba. Let's see. That's probably going to be undervalued. Okay. Yeah. Have a good night. Are you gonna stay for Baba or? Have you ever done on AMC? I might have done one. I don't remember. I don't remember what it was. It was a while ago. $158, $170, $184. Things should be okay. I'm at 132. I think that's $132. So it's definitely undervalued for a while. So look at all these gap downs. Like the gap up here. Yeah, I mean it's just it's a weird stock. Well, it's China. That's the reason the stock doesn't move. The risk of China. Okay, so I guess that's probably it, right, for everyone? Did anybody have any more, or are we all set? It's my longest stream. Yeah, definitely most Chinese stocks are undervalued. Okay, thanks. Thanks so much for the donations. Thanks for joining. And I'll talk to you later.